I wish to make this statement on behalf of the majority shareholders and non-executive directors of Imperial Bank. As key stakeholders in Imperial Bank, we want to begin by apologizing for our silence following the placement of the bank into receivership in October 2015. From the time we established the existence of the fraudulent activities by the former Group Managing Director, Abdul Jan Mohammed, and certain of his senior staff, our primary objective has been to protect the depositor and bondholder through the recapitalization of the bank, and we have been working tirelessly to do this. Working with the Central Bank of Kenya and the Kenya Deposit Insurance Corporation, KDIC, we honored the stipulation applied by them not to speak out publicly on this matter. We now realize that we should have been more proactive in reaching out to the stakeholders and the public in recent months. We want you to know that the shareholders and non-executive directors of the bank, for whom I am the spokesman, deeply sympathize with the plight and frustration of all depositors, bondholders, and all other affected shareholders. We want to ensure that the truth about what happened is revealed, and we intend to work together with all the stakeholders to reopen the bank within the shortest possible time. We also want to express our deepest regret at what has transpired. For many years, we have proudly given ourselves to Imperial, and not once did we know that anything of this nature was possible. The late Group Managing Director, Mr. Abdul Jan Mohammed, was a colleague and a friend, and to many of us, an extended member of the family, and none of us could have imagined a betrayal on this level. What he did is unforgivable, but we have resolved that we cannot let the actions of one disturbed man and a handful of weak and corruptible managers and public officers destroy the lives of thousands of people who place their trust in the bank. So actually, what happened? Following the death of Abdul Jan Mohammed on 15th of September 2015, it was revealed to us by two very senior managers at the bank that Abdul Jan Mohammed had been running a scheme of fraudulent disbursements with certain accomplices within and outside the bank. The said disbursements had been made without having gone through a formal credit review and approval process, and without reporting the same as required by the International Financial Reporting Standards, IFRS, and the Banking Act, the prudential guidelines issued hereunder, and the bank's established internal lending policies and procedures. The board reacted swiftly by appointing a team of internationally renowned forensic investigators from London, FTI Consulting LLP, to probe and report on the situation. Their preliminary investigations and the resulting report were completed in less than a week. And with the goal of protecting all the stakeholders, the Board of Directors of the bank fulfilled its statutory and moral duty and reported the findings of the forensic audit to CBK. It is worth noting that the FTI consulting report included a high-level recovery plan and that the bank at the time of reporting had a healthy liquidity circa Kenya shillings 20 billion. It was further revealed to the board and shareholders that the fraudulent and irregular disbursements had been concealed through improper accounting methods of suppressing assets and liabilities. And what we now know to be reports that had been doctored by certain senior bank employees, including falsified board documents and borrower lists. We have further established that CBK and the bank's external auditors, PKF Kenya, may have failed in their audit duties. The investigations revealed that the external auditors appear to have failed in their duty to conduct the audit according to laid down standards, and to have failed to perform basic tests, while it appears that CBK not only failed in its supervision duties, but also failed to respond to tip-offs given directly to them with due care and seriousness that is required. Our strong belief that the bank was being operated within the strict confines of the law was over the years reinforced by a number of factors, include the following. Like all commercial banks, the bank was subject to periodic and regular on- and off-site inspections by the CBK. And at no time did CBK report any material breaches of statutory and regulatory requirements, nor any issues affecting the financial soundness of the bank. The book of accounts, as prepared by the management of the bank, were subject to audit every year by the bank's external auditors, PKF Kenya. And each time the accounts were approved without any qualification, nor were any issues raised on any material breaches of law or the laid down policies and procedures. Furthermore, CBK approved the publishing of these accounts in the media and otherwise. The bank performed well over the years, as reflected in the returns. Expansion of the bank's branch network, technological advances,